Hello everybody and welcome back to another video. So in today's video I'm going to be breaking down this exact trade right here which secured me $700 in the market. We took this one on Thursday the 15th of January. So let's jump straight into it and I'm going to explain to you exactly how I took it. Okay, so let me move my head out of the way. Alright, so this one was taken across multiple funded accounts. This was a 1 to 5 risk to reward trade, but I took profit a bit earlier on, so I took profit around this area here. So you don't need to hold a trade all the way up to extreme points, just take small profits. So let's go into replay mode and I'll explain to you guys exactly how I took this. All right. So let's just delete everything at this moment in time. So one thing that I like to look for, so this strategy is called the LOP. Alright, so this is my own strategy that I came up with. I call it the LOP. Alright, so what does that stand for? Liquidity. I can't spell, just that's liquidity. Order block and price action. Okay, this term excludes target, so target would just be a simple fair value gap, so target is FVG. Alright, so when you're looking for a target, you want to be targeting FVGs. So let's start with the first thing, which is liquidity. Alright, what is liquidity? Liquidity are these points right here, and when we come below these areas, like we have right here, we have come below this point, swept it. It's called a liquidity sweep, okay? So, sweep, I spelt it right that time. Okay, so liquidity sweep looks something like that, okay? And then, of course, we have another one here. But these don't count as liquidity sweeps unless we get a pullback into the range, alright? So that is the first part of the LOP. So L stands for liquidity. We are looking for liquidity sweeps, okay? Let's delete this one. We'll delete that. We'll come back to this area. Okay, the next one is order block. Alright, so when we get a liquidity sweep, we're going to focus on this liquidity sweep right here. Let me zoom in for people that are watching this on their phone so you can see it a bit better. You want to drag price backwards. So you're going to mark the low of the liquidity sweep and you're going to pull price backwards. And you should, if it is a correct trade to take, have price action sitting all the way back here. So when you drag the price backwards, so you're going to pull your chart back, you will see there is other price action over here. Okay, so look for other price action. All right. And all you want to look for is an order block. Okay, so that is where order block comes in. And an order block is the last downwards candle. So we have a downwards candle and an upwards candle, and then we have an upwards candle and a downwards candle. Okay. So in this case, we would be looking for a downwards candle, which would be this one right here. And all you would do is you would mark that order block out. So the red candle is an order block. Right, and that would, if we drag this down here, if I can, would look something like this. Let's just make this a bit smaller. And then that would be your order block sitting right there, okay? And then if you flipped it around, it would be the other way around. And this would be the red candle. So if we are looking for sells, in this situation we are looking for buys, so you just flip this upside down. But if we are looking for sells, then your last upwards candle before a downwards move would be the order block, okay? So hopefully that makes sense. It's not hard to learn. I do have other content on my channel explaining what an order block is. Okay, so then that is the next step. And or if there is not an order block and we are not tapping into the order block from this sweep, then we are not going to look for a trade from this liquidity sweep, okay? Because it doesn't make sense to. So the next step is price action, okay? So what we want to look for is a break of structure to the upside. All right, so If you look at this price action here, we're going to mark this high out right here. And we can also have a high created in the pullback, all right? So when we get a pullback upwards, we want to see a break of structure to confirm that we are rejecting this, all right? So if this broke structure above this area right here, that would be counted as a break of structure, okay? So that would have to be very linear though. So it would have to be a linear break of structure like this. But what if we get a break of structure before this, which would look something like this? So as you can see, price has pushed up, pulled back, and we have broken structure. All right, and that is what's happened in this trade example that I took live in the markets. We got a break of structure lower down. So we created a high, and we have broken structure. So what this does is it's basically just showing a reaction from this order block area. So instead of just continuing downwards, price has decided to range and break structure. That's all you need. And once that happens, you will just enter off of the wick sitting at the bottom of this break of structure. So let's jump into the live chart example over here. All right. So let's have a looky. All right. So what do we have? Okay. Let me just pull my chart around. We have a liquidity sweep right here. All right. So that is the L. Oops. L. All right. Liquidity sweep. Okay. So what have we got? We've got liquidity here. We swept that, but we didn't hit an order block. And then we've got liquidity here. We swept that. And then what do? Mark the low of that liquidity sweep. Let me just go back a little bit. Mark the low of the liquidity sweep, pull price backwards. And what do we have here? Okay, what do you see this line running through? An order block. All right, it's this last downwards move here before this upwards move. So you see I've got a downwards candle and then price has pushed up aggressively. All right, so that is the last downwards candle before the aggressor move. All right, and if you look, you can see on this liquidity sweep here, we did tap into this order block right here, but we never actually got a break of structure to the upside, did we? All right, so as you can see, price pushed upwards and never came to break this high up here. All right, if we broke this high, then I would be looking to place a trade, but we never broke it. We just pulled back and we swept the newfound liquidity when we pulled back from that point. Okay, and then this is now the new liquidity sweep. Okay, so what have we got? We've got the liquidity sweep, and then the high that we want to break is right here. All right, so let's play price on. And there you go. There is the high that we have broken. Okay. And then price pulls back. And then let's play price onwards. And then I didn't enter off of this area because I wanted a double confirmation. Because you can either have just a singular break of structure like we got here. So we would have had the sweep. Or you can have a double break of structure. All right, and the double break of structure is an extra confluence, so you can have one or two. When you have two, you can confirm that 70-80% of the time you're going to be correct. When you have a single, you're going to be thinking 50-60% of the time we're going to be correct. But the only reason why I wanted a secondary break of structure was because of how close this high was to the liquidity sweep. I would have rather price have broken this one right here. So what do we get? We've got a break of structure here, and then we've got a secondary break of structure right here. All right. And all we do now is we mark out the wick down here. Beautiful. And then we place a buy limit here, and that is it. And then you put your stop loss just below that wick. And then we've got this fair value gap sitting here. And that is where you are going to set your targets in for a 1 to 3.5. Right? Earlier on in the video, I said I targeted this. That was wrong. I did take this trade a few days ago, so I've kind of forgotten where I placed my target, but I know I would have targeted here, and I remember it now. When you play price on, you can see price comes up to this fair value gap and rejects it, and that is why I wouldn't target it. So if price has come up to a fair value gap and rejected it, you are going to want to go up to the next one for targets, okay? And what happens? You can see price comes down, rejects this or these wicks down here, and then play price on and plays around for a bit, and bang, okay? And there you go. Target has been met. All right. So hopefully all of that made sense to you. I do plenty of these trade breakdowns on my channel, so please make sure to check them out. I would also like to put a plug in. I did take this trade live in my community. I have a brand new live trading room, and the link for that can be found in the bio, okay? In the description, sorry. And if it is not something you're interested in, I have a free Discord, which is the same room, but you won't have access to the live trading. Okay, but thank you all very much for watching. I hope you gained a lot of information from this video. Make sure to like, follow, subscribe, whatever it is you're watching this on. YouTube, obviously. Yeah, thank you for watching. Take care.